Now quickly, today's price action on Friday's price action, we gapped higher, came back and we filled the gap here on the 5-minute chart and continued to go higher, float higher along that 20-period moving average all day. Ended up forming a divergence towards the end of it. Multiple divergences developed, but only gave us pullbacks to, over the last few days, pullbacks to the 20 period. Again, market manipulation on very, very light volume, carrying prices higher, forming a negative divergences. Daily time frame on the ASMA oscillator and the RSI and the MACD. This created a massive divergence on the 15-minute chart. And again, we talked about these bull flag patterns before in the intraday charts and the breakout and the back test here. And then we formed another one. I talked about all these. Signals remain bullish. My signals continue to be bullish. Divergences that are forming on the weekly and the daily charts now. Here, again, dancing on very, very light volume. Winning streak this week with the short trading week with Independence Day. Above that 20 period on the 5-minute chart gave us this rally that's forming this divergence. On the 15-minute time frame, I'll be watching to see what becomes of this divergence as we're pushing into some of the resistance trend lines that I've been talking about, and which you'll see again in this video. If I bring up the 20 period moving average here in the 15-minute time frame, again holding above that 20 period, we'll be watching to see if we start turning below these 20 period moving averages with this divergence on the 15-minute time frame and extremes, which you'll see later in the video on the RSI in the 60-minute time frame. Now Friday NASDAQ was up just over 1%, 1.05%. It was up 205 points, coming up and slamming up into this channel line I've been talking about in every single video. This one is a parallel boundary from these lows over here and this upper boundary connecting these previous peaks. And we slammed right into it. We reached extremes with momentum and started to go flatline and roll over there. That 60-minute chart here. You get these possible little miniature head and shoulder patterns right here. Talked about the larger ones on the daily chart, but you have this smaller version of it. Whether it plays out or not, who knows? If we end up coming back towards the 200 period moving average, then you got a shot of it playing out. I'll be watching this trend line right here. Again, we have different trend lines that I'm watching in the weekly and the daily time frame on S&P and NASDAQ. Happens to be one of them. That's caused the RSI to become very, very oversold. The rally up to this trend line right here. So again, we need to be watching the extreme form, and we come down and we confirm a lower high, maybe get the head and shoulders, or still go higher above the upper Bollinger Band, the daily time frame, and then turn back down. And again, if we come down, do we end up getting a lower high with this possible head and shoulders? But we're at extremes here on the RSI. Still can form a divergence, move beyond the previous extreme. We had formed a divergence here, right here, but it only gave us a move back to support. Talked about market manipulation over the July holiday, and that's exactly what we saw. I told you it could be manipulated up to these upper boundary channel lines. It could be manipulated down, rose, and we got a big rally on very light volume. That's what happened. The MACDs turned up, so again, could it make a brand new fresh divergence, or does it just roll over and give up the ghost right here? We start losing in the 60-minute time frame the momentum line, and we start turning off of that trend line for NASDAQ. Then again, you have this same pattern here on the S&P 60-minute chart, possible head and shoulders. Again, you had the same divergence form here, but it only gave you a move back to this horizontal support. I talked about how trend signals were not able to turn bearish and talked about market manipulation up or down. Told you my signals remained bullish, and the ones that did turn bearish with momentum reverted right back to bullish. Again, possible head and shoulders on S&P, momentum at extremes, going flatline. We'll see if it starts rolling over here. We start now getting earnings coming down the pike. Have a lot of banks going forward. And for the S&P, I've been talking about these channel lines in every single video. Again, I talked about this trend line. I told you if we get above this trend line right here, then the blue trend line, the red trend line come into play. I'm also talking about the trend line in the weekly time frame that we're just underneath that. See it in the daily here, and also trend line here is part of a shorter rising wedge that I'm talking about in the daily time frame. That again, we're just right below that level. If we exclude the shadows over here in the daily time frame, and I'll show you that in the daily time frame. But again, We've risen up to extremes. We went flatline. I'll be watching to see if we start to roll over or go a little higher and reach this level. NASDAQ's already slamming into it. Still might overthrow it. Trend lines change and expand all the time, but it's just trend lines I've been showing you in every single video that I'm watching. Here in the 60-minute time frame, we have potential channels. On the weekly chart, we got the rising wedge. We got if we exclude the bottoming tails in the daily time frame, you've got a rising wedge. These are the trend lines that I've been talking about. And we had our bull flag pattern. I talked about that with this pullback right here. But again, signals remain bullish. We didn't flip the trend signals as I've talked about. And I told you, again, still might make our way to the upper channel line of the channel here in a time frame. Again, we're just below that level. We're reaching extremes. Same thing here. Are we going to end up forming a divergence? Like when you reach extremes over here, you started to sell up, but you went sideways, got to pop a little bit, tiny bit higher, and then you got your sell-off. Do we confirm a lower high, or do we get a divergence here on the 60-minute time frame? But we do have divergences daily and the weekly time frame. Tell you is we've got those green awesome oscillator bars. Green awesome oscillator bars, when they hit the divergence daily time frame, we will likely see it spill over into the weekly time frame. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the chart, if you like the indicators, please consider helping out by supporting the channel today. You can just donate any amount you want. Just ask that you do what you can to help out. Made on YouTube, again, is through sponsorship. I have no sponsors. I turn all those offers down because I don't want to sell you stuff. Send you to websites that want to sell you stuff. Still need the channel to be profitable because it takes a long time to do this. I just ask that you help out. Take a moment to do that and step up to the plate and make a donation today. I would really, really appreciate that. Put it all out there for free and just ask that you do what you can to help out. So please consider helping out today. And here is the green awesome oscillator bars I've been talking about. Your MACD also forming a divergence here. You got it on the stochastic as well down here. So again, when this is done, we'll see those weekly divergences begin to play out on the RSI and all the indicators that I show you constantly several times per week. And with the topping tail that we had here, we went sideways. We couldn't get a bearish reversal of conditions. Momentum signals turned bearish on a few indicators, mostly for the NASDAQ though, and couldn't get the flip in momentum here, and it remained bullish. The cloud remains green, the bars remain blue. We'll be watching to see if that winning streak that we had this week fizzles out next week, maybe surrounding some of these trend lines I'm talking about in the video. But I'll be watching, and even the reversal may start, and we still may get a green bar like what the Dow did. Pay attention to these divergences that are forming on the awesome oscillator and the MACD, also stochastic. I'm here again. We've got that massive divergence on the awesome oscillator and the MACD in the weekly time frame. Again, we had the topping tail, no confirmation. I told you we could still float up to that upper boundary of the channel in the 2-minute time frame, or the trend line, which we did come just underneath it, line of the rising wedge on the weekly chart, which again I'll be showing you just under those trend lines. You see again P have these divergences play out and move back to the neckline and play catch up to Bitcoin. Bitcoin seems to be leading the charge lower now, dropping 27.5%. I've got my theory that seeing this decoupling, Bitcoin's going to form a bottom, rebound back up while the S&P starts to tank. That's my theory. S&P is going to start following Bitcoin's lead. The S&P was leading, and Bitcoin regained control, and apparently Bitcoin is now leading. I'll talk about the positive correlation, which they usually have. Now you don't have that. A huge red flag warning for the S&P and the NASDAQ. Weekly chart here. We're looking for that red awesome oscillator bar, and again, good chance we're going to see that show up here, maybe around these trend lines I've been talking about. Weekly chart, same thing. You've got the same divergences going on here. The awesome oscillator, the MACD. We can hang out around the highs if the candlesticks don't get confirmed. In fact, I think we're overthrowing the upper boundary of the rising wedge on NASDAQ. Weekly time frame S&P's just under it. It's our third awesome oscillator bar for the NASDAQ. Again, you've got the divergence in the daily time frame forming here, as well as on the MACD and the stochastic. Again, 4-day winning streak. We went sideways here. We couldn't flip momentum to bearish. Some signals you did with NASDAQ. Here you couldn't. I talked about that at great length and detail. Told you, I warned you about watching for green bars and a divergence if we try to go up towards the upper channel line in the 60-minute time frame. I've talked about this in every single video. We did see the bars appear 3 days ago, and again, now we're slamming up into that upper channel line. It redefined, but the NASDAQ channel could possibly be done. And I'll be looking for red bars here. I'll be looking for an MACD rollover. In the histogram is making the spread between the MACD line and the signal line here, down here. The MACD histogram is making a lower high, while price is moving higher, also diverging with NASDAQ. Check back on Sunday, 7 a.m. Eastern Time. I will be posting another video. I'll try to be shorter, try to keep it short and just show you some of the momentum and trend signals real fast. Momentum signals try to turn bearish, but they weren't able to stay that way. Now we have this advance on a very light volume, and divergences are forming on indicators like momentum here. Check back and I'll be talking about some of these indicators, and the video is going to be shorter. As you know, I watch both log and linear scaling, and I was watching the linear and the log scaling on the S&P and the NASDAQ. The S&P came right up to the trend line here on the log scaling, overthrew it on the linear. We closed out strong for the week, up 107 points, up 1.95%, and we came right up to this trend line here on the log scaling. I've talked about this rising wedge. Log scaling is usually for longer periods of time like this. I think NASDAQ is overthrowing it. Had reversal candlesticks. Again, candlesticks are meaningless unless they get confirmation. We had the Gravestone Doji last week, and to be confirmed on the S&P 500. Again, we've got the divergences here on the RSI. We've got it down here on the MACD and on the Awesome Oscillator, as I've been talking about. And here, in case you don't know what divergence means, price is moving higher, but the indicator is making a lower high. The divergence may not be done here if we try to move to the upper channel lines on those 60-minute charts. I think NASDAQ slammed into it today. I think S&P is still below it, but it's hitting this trend line here in the weekly time frame, and you can see that on the daily as well. I also want to point out again, I warned you last week about the potential 9 count completing this week, and it did complete. You had to have bar 8 or 9 above bar 7. Both of them were. So again, we had a perfected sell signal. It just shows price exhaustion. Now sometimes the candle count plays out immediately. Other times a little higher. Sometimes you go sideways and then it plays out. Here we got it. We went a little bit higher, and then it played out. Show you points in history where other times it played out immediately. And the time to show you this because those negative divergences in the weekly time frame all over the place, and we're getting those negative divergences, warning that a reversal is coming. And as we're doing it, we're getting this 13 followed by a 9, a double sequence count sell signal here in the weekly time frame. If we start to see a reversal or go a little higher, start to see a reversal again, we have a possible head and shoulders. As we're getting those negative divergences everywhere, you're getting this 9 count sell signal here in the weekly time frame. Now keep in mind, my signals remain bullish in the daily time frame and on the weekly chart, but you're forming divergences now in the daily and weekly time frame. And again, double sequence count sell signal on the NASDAQ weekly, a 9 or a 13 followed by a 9, double sequence count reversal pattern. Again, we had back-to-back bearish candlesticks. The candlesticks are meaningless unless they get confirmation. Talked about that at great length and detail. We could not push down below that candlestick from last week. Talked about that if we did not confirm that candlestick, we can go up and hit the upper boundary of the channel. On the 60-minute chart, we did do that. Again, if we turn with the 9, 13-9, or a little higher, we get a doji, maybe we get a dark cloud cover where we go a little higher, we go lower. But by the end of the week, get an inside day or whatever the case may be, again, you still have this possible head and shoulders formation on NASDAQ and S&P 500. But both the S&P 500 and NASDAQ got 13 counts followed by 9 counts, double sequence count sell signals, the weekly time frame completed this week. You know, NASDAQ got the 9 count over here. This shows price exhaustion. NASDAQ got the 9 count over here. We tried to go a little higher. couldn't really do it on a closing basis. And again, we tried to push higher, but it ended up failing and we got the correction. This one will likely lead to a reversal. And if we end up coming back down to 17,000 and stop making new highs, you got a shot at the right shoulder and you've got a shot at the topping process. We could sell off into the summer months here and attempt to rebound back up. If this pattern does end up playing out, too early to tell, again, the left shoulder would come in at the mid 18,000, low to mid 18,000 area. Just got a 9 count on NASDAQ and S&P 500. Bitcoin already had one back in March. Okay, and while it was not a perfected sell signal, bar 6 was the high of the count because Bitcoin was so weak it couldn't make new highs here and it couldn't make new highs here. Sold off 23.5% here, and now lower high we've sold off 25% on with this sell-off. The whole thing we've sold off more than that, probably around 27% or so, maybe more. Point is the 9 count led to significant declines with Bitcoin, and now you're getting it on the S&P and NASDAQ. The 9 count formed it, went a little bit higher, but then that same week you started the reversal and you ended up getting the collapse back to the 20-week. You bounced and then up below the 10, tried to get back above it, and then you failed. You lost the 20 now. So again, really bad things. Now I do believe Bitcoin is trying to bottom. My signals are still bearish for Bitcoin. They turned bearish in early June. See those signals if you go onto video. Fascinating. But he believed over here that, oh, no. Bitcoin's going to just keep, going in this new bull market, and it's now collapsing. And these people on social media are now, throwing their computers with their charts on them. Some pretty interesting pictures there. Bitcoin has now collapsed. S&P and NASDAQ could be right behind it. But this is what happened when Bitcoin got its 9 count. Even though it wasn't a perfected signal because Bitcoin was so feeble and weak, at this red line at 69,000, it still collapsed. So my theory between, and again, bear with me if you don't like Bitcoin, that's okay. Some people don't like it. It's sending us a message that, hey, Bitcoin's going down, the S&P's going up. That's not usually the way it works. Bitcoin's going to recover here, and if Bitcoin just bottomed with the bottoming tail that we got on Friday, hey, then the S&P could begin to turn with its 9 count weekly chart. Again, if you could bear with, nevertheless, I digress. Back to the S&P 500. We are getting this 9 count as we're coming up to this trend line in the log, with the log scaling, forming these divergences on the RSI, the Awesome Oscillator, the MACD, and a boatload of other indicators. As you can see here with momentum, which again, notice the divergences over here. It marked the bottom. Over here, it marked the top. Now you've got potentially a reversal pattern on weekly indicators. Same thing here, the negative divergence as we're going up and forming this rising wedge. And again, sometimes rising wedges get overflow. We had the channel. We overthrew that. And it's evolving into this rising wedge pattern now. And again, the divergence over here marked the bottom. The divergence over here marked the top. Now you have another one. This divergence, this little divergence right here, it marked this peak right here at the March high, and we sold off. So it's not just the RSI. There's a lot of indicators, and I can show you a whole lot more. Let's take a look at this trend line on the daily chart, the upper boundary of the rising wedge. Now, if I take the July peak, including the shadow, and I want to show you it up close, again, including that shadow right there, and I connect it to the peak right here at the March peak, including the shadow, well, it's directly overhead. If we exclude the shadow right here, if you exclude that shadow, we're slamming right into it right now. Very, very close to it. But if we just take it, you can see we're just right below it, just that's including the shadow. If you exclude the shadow right here, let me just fit them both in here. If you exclude the shadow, you're slamming into it right now. And we're hitting our upper Bollinger Band. It looks like we closed just slightly above it, but it's directly overhead. And that's why I wanted to take the time to show you this trend line on the daily chart. You can see it up close and personal. And again, I zoom out, you can see the rising wedge that we just saw on the weekly chart right here in the daily time frame. Interesting how, again, this trend line right here to here We got the higher low right at that level. Now these points are pointing up to where we're at right now, or just under where we're at right now. So it's what I'll be watching, and sometimes rising wedges get overthrows, sometimes they don't. But it's a trend line to be watching. We'll see if it plays out. If it's producing selling pressure surrounding earnings, we're now going to be getting a boatload of bank earnings. Also be watching to see if there's any concerns about that, again, surrounding their balance sheets and exposure to commercial real estate sector. If we start to reverse around the trend line, or if we overthrow it and start to reverse, again, I'll be watching to see if we come back and try to break this trend line right here and take out the 20-period moving average. And if you do, again, we could start heading back towards horizontal support. And if you do that, again, you've got your possible head and shoulders. And shoulders mark the 2022 top. Very, very common pattern. And if it is that we break the trend line and start coming back down, it might be that we bounce off the 200 right about the time you hit horizontal support, and then you've got a shot at your right shoulder, which again, that would be coming up here into this 5,300 area or so. Now, I want to say something. I have a theory about Bitcoin and the S&P. They have a long-term positive correlation, but right now there has been a short-term decoupling. Was a short-term decoupling back at the 2022 top. Bitcoin peaked in November and stopped 2021, stopped making new highs. S&P went on new highs. They diverged from one another. A short-term decoupling, and Bitcoin leading the charge lower, and the market eventually followed. As Bitcoin has more volatility, and the S&P and the NASDAQ and others will often peak before. Bitcoin, the last 2 days, I mean, for the week, it dropped 14%. Now it's rebounding at my support levels. Bitcoin's going to rebound back up, and I think the S&P is going to come back down. I think this short-term decoupling is going to continue. Bitcoin is possibly getting a bottoming tail today. I've been talking about looking for a bottom just below the previous low. I've been watching my Bitcoin videos. You can see them at the, I'll link one at the my latest one at the end of this video, at the end of my next video as well. I'll link it for you if you want to see it. Pretty fascinating Bitcoin indicators. Bitcoin's already getting these sell signals. Bitcoin's already dropped. I mean, 14% at the lows this week. It's already dropped 25% to June high, while the S&P rallied in June. Bitcoin tanked. Bitcoin is now trying to bottom with the bottoming tail at my key support levels. It very well could be. We see the S&P begin to play catch up, and Bitcoin is now leading the charge lower, just like it did. Peaked in late 2021, and it began to sell off, and it collapsed 52%, diverged with the S&P, and then it collapsed 52%, and the S&P fell right behind it, and the S&P collapsed 15% in 2 months. In January and February, it was less than 2 months. It was actually about 6 weeks or so, 6 or 7 weeks. It collapsed about 15% before getting a rebound. Bitcoin could be a warning signal, but I'm just telling you, you've got this this rising wedge, you've got this trend line, you've got the upper Bollinger Band now being tagged again. Just below this trend line right here with the log scaling, with the linear, I think we slightly overthrew it, and if we exclude the shadow, we're right at it. So I'll be watching this log scaling here very closely as we go into next week and as we start seeing earnings come down the pike now. This is the S&P. Take a look at Bitcoin. I just want to continue to point out that as S&P is making new highs, Bitcoin already did. That's what happened at the 2022 top. There's been a short-term decoupling. I want to point out, as the S&P is forming negative diversions in the daily time frame right now, the Bitcoin price is forming bullish diversions. I think Bitcoin's going to bottom here. Sold off sharply, down 14% for the week. It's down 27.5%. Actually, from this high over here, it's down 25% from that high right there. Again, Bitcoin stopped making new highs. It made a lower high. It diverged with the S&P 500. There's been a short-term decoupling. The S&P can now play catch-up. Let me just tell you this. You may not like cryptocurrency. You may not like Bitcoin. But everybody, crypto, didn't think this was going to happen. Said there's no possible way it could happen, just like they're saying right now. NASDAQ's making new highs, and NVIDIA is not. Pay close attention to that because it's forming a bear flag. Now, I think Bitcoin's going to rebound here. My signals turn bearish back up here. 6th, 7th, 8th, 10th. Signal started turning bearish on the 11th. The 11th through the 14th has sold off and now into these lows. And I talked about Bitcoin coming down to the trend line, the blue trend line here, including the shadow, or this trend line, which we're now hitting here, or 200 period, and overthrowing these levels and trying to find a bottom. That appears to be what's happening as it's getting a double top. The S&P is likely going to follow Bitcoin and move back towards its neckline, which would be the 4,900 area. Bitcoin tries to get a recovery towards the 100 period moving average and the cloud, which it will probably stall at the 100 or just over it, or a feeble rebound below it. Very good chance Bitcoin is now topped because the weekly signals are now turning bearish. But again, as my signals turn bearish over here, and I did this sell-off, I talked about Bitcoin trying to go join S&P, make a higher high, and then turn diverged, which again is a possible warning sign of a market top. I think Bitcoin's going to try to find a bottom here. Maybe we flirt with this low some more, but I think, sometimes you get multiple bottoming tails. But again, this percent sell-off we had on Friday, buyers came back in, and again, I'll bet you we get back above that 200 or make an attempt to do it and then come back down, or just keep going and move towards the 100 period. But while Bitcoin is trying to recover after dropping 27.5% from the high in March, S&P is making new highs, so something is wrong. We've got a bullish divergence with Bitcoin. We've got a negative divergence with the S&P 500. So the short-term decoupling could be signaling a top for the stock market. That's my theory that I've been talking about of why I think we're getting the short-term decoupling. I think it's a warning sign for the S&P and the NASDAQ. I'll link my latest Bitcoin video at the end of this one and learn more about Bitcoin. You can watch that. I have some really cool Bitcoin indicators. You have to like Bitcoin, but I'm just telling you, it's sending a potential message. It's now taking the leadership role down, dropping 27.5% here in 4 weeks. In 4 weeks, lost over a quarter of its value. It did this back in 2021. It peaked in November. The S&P peaked 7 weeks later in January. It was about 6 weeks later. And Bitcoin had already started to drop, and the S&P played catch up. Bitcoin ended up dropping 52% before all was said and done. It lost half its value, then got a recovery, a feeble rebound off the 200. Meanwhile, the S&P lost 15%. Bitcoin was in a free fall, but Bitcoin did try to recover off the 200 before it went down further. So again, huge warning signs. S&P could begin, and NASDAQ could begin to play catch up to Bitcoin. This exactly, but because the S&P has exposure, tech and the Magnificent Seven, diverging with Bitcoin, but the Bitcoin equal weight looks identical to the S&P equal weight, and again, although now it is moving to a new low, we haven't seen that yet with the equal weight. It will likely do that. I keep showing you the equal weight chart and that divergence and over again every single week. Here's Bitcoin in the daily. Now let me just bring up the equal weight real fast. Again, it looks just like Bitcoin. This is the equal weight for the S&P daily here, equal weight. It made a lower high, also peaking lower high in May, just like Bitcoin did. Bitcoin went up, it tested that, a little miniature double top in June. Again, the equal weight has come down at a lower high for June, and then now as we're moving into July, this consolidation. So again, wouldn't be surprised S&P started reversing if we started seeing this follow Bitcoin, and again, breaking sharply below this level, where the S&P will probably move back towards 4,900, catch up with Bitcoin. Just some things, again, and I keep showing you this chart over and over. So the divergence between the two is warning of a reversal, and the S&P 500 is being influenced by the Magnificent Seven, make up about 1/3 of its value, of its market cap. This is all the stocks being equal on the S&P 500. It's not moving to new highs. What's even worse is not only do you have this divergence here from the May peak to the June peak, and then now again we're making new highs in July, and we're not. So you've got the divergences going on here in the most recent 2 peaks. Going back, you've got it here with the 3 different peaks. It goes back to the March peak. All the way back, you've got this large divergence where you're getting a series of lower highs on the equal weight, the S&P equal weight, and the S&P cash is going and getting a series of higher highs, forming a rising wedge. And again, actually, I've taken the trend line from back there, excluding the shadow, which will have a larger one in the weekly time frame. So you've got this larger divergence here, the March peak as well. Nice. Talking about market breadth indicators. Again, here we've had this rally to new highs on lighter volume. Interesting to see if we start seeing a distribution should the divergences in the weekly time frame begin to play out. But here, again, if you got 55% of the stocks on the S&P 500 are below their 50-day moving average. Only 45% of them are above it. It's diverging with the S&P 500. This is a huge red flag. I could set that backwards. The majority of the stocks are below their 50-day moving average, less than half above their 50-day moving average, okay? Here you got 44% above their 20-day moving average. Again, more than half of the stocks on the S&P are not even above their 20-day moving average. And you've got these divergences. So again, huge, huge warning sign. Other divergences, look at the AD line. The AD line is making a series of lower highs. The S&P 500 is making higher highs, a series of higher highs. Again, they're diverging. Huge and problematic. You've got these market breadth indicators that are diverging with the S&P 500. It's warning of a potential reversal, but you've got to see the signals. Momentum turn back to bearish, then you got to see the trend signals turn back to bearish. My signals continue to remain bullish, just pointing out to you that there are the divergences present forming in the daily and the weekly time frame. Got it on these market breadth indicators like the AD line, advancing declining issues. This was another trend line I'm watching right here. I showed you the other one earlier. I slightly excluded the shadow, but again, we're coming up to this area here if we included a little higher. But another trend line I'm watching here, connecting the May peak and the June peak right here, or I should say this early peak over here. We could even take it here from this level, and it's just a little bit higher. Just some trend lines I'm paying attention to. But this is saying, hey, a reversal is likely going to happen soon. Now again, S&P and Bitcoin, which usually have a positive correlation, are totally decoupling. Bitcoin is now making a bullish divergence, having sold off 27.5%. S&P is forming a negative divergence, making new highs, and here on the MACD as well. We have this rising wedge in the daily time frame, excluding the shadows over here. We're just below that trend line right there. We're just below the trend line, going back again. Rising wedge on the weekly chart, going all the way back to the July peak of 2023. A massive rising wedge pattern that I'm showing you. My signals continue to remain bullish, but these divergences are forming in the daily time frame, and we have the divergences in the weekly and the monthly time frame, suggesting again we're going to get a reversal. If we do, you've got a good shot at a head and shoulders if we start to break down from the rising wedge here. NASDAQ is hitting that upper Bollinger Band again as well, going up and slamming into just underneath the channel line that I've been talking about. Remember, I talked about these channels in the 60-minute time frame. Well, we're coming up and we're just underneath that level right now, and negative divergence is forming. Thing on the daily chart for the RSI, again, you got a divergence setting up down here at the MACD, and again, potentially a head and shoulders pattern if we start to sell off sharply. These divergences and the divergences in the weekly time frame. Got a smaller head and shoulders pattern on the intraday charts with this low right here. You've got possibly a head and shoulders on both the S&P 500 and the NASDAQ. We start moving down towards the support area, moving back towards gap support or the gap fill here, towards this rising trend line. We have a 3-day or 4-day winning streak on the NASDAQ on very light volume, running the Independence Day holiday. We still have a possible double top on the Dow, turning off a major trend line, forming now a bear flag. NASDAQ's made new highs, the Dow is not. They're diverging from one another as they often do. The Russell is not making new highs. The S&P is. They're diverging from one another. Again, is associated with market tops. Just quickly, we had that divergence between the S&P and the Russell back in 2022 that marked the peak there. Again, the Russell made a lower high. The S&P made a higher high. I have this massive divergence between the two. Russell's nowhere near the highs of 2021, late 2021 there. S&P's made a new high, so you have this massive divergence, and then again we're also forming another one here in the more recent price action where the S&P is going higher, but the Russell's making a lower high, turning down off of that trend line, mind you, connecting this peak here and this peak back over here. And you got these warning signs in the more recent price action, but this larger divergence between the two, a huge warning sign as caps and large caps usually diverge at market tops.